Hello, this is Anthony Nagel with Lowercase Capital. Today's June 8th, 2020. Is it even the weekend show if it comes out on a weekday? I don't know. What are we going to talk about today? Gross versus net exposure. We'll talk about the recent market moves and what's continuing today on a Monday afternoon. And we'll also talk about an upcoming networking event. But before that, quick disclaimer. This program is intended for informational and educational purposes only. This information is not intended to be construed as investment advice. Please contact a financial or investment professional before making any financial or investment decisions. Okay, so what are we seeing going on in the market? Pretty big moves on the up direction in the past week. Pretty much across the board, things are looking green. If you look back across the past month, what do you see roughly speaking? 10% gain. Pick your index, 10% gain. And the VIX is down 10% during the same period. Volatility index, for those of you not familiar. So what does that mean to me? Not a whole lot. Just because the market's moving up doesn't mean to me that we're inside of a bullish trend. What I see accompanying this bullish move is more and more bullish sentiment, and there's really not a great way I know of to objectively measure that. But everywhere I look, I see people talking about being positive on the market, and I see some comments on social media even talking about, despite the fact that people are saying that they're bearish, the actual positioning, when they look into it, is still on the bullish side. So to me, someone who's expecting maybe more of a neutral or flat expectation for the market in the immediate term, what that's saying is perhaps we're going to be due for a correction back downward. Not necessarily to the lows of the market crash, but that perhaps this recent market move is a little bit overdone. But I don't make trades based upon purely these subjective inputs. I want to make sure that I'm also backing up my actions with data. And so when I look to my risk management system, looking at big picture macroeconomic data, it's still suggesting for me at the current time that I should still maintain a pretty neutral positioning. And so what am I looking for to change that? Well, either or both a significant change in the VIX level. We're looking to get back down somewhere closer to where we were historically in that 12 to 15 range. And so for me, something less than 20 would give me pause, a reason to think. But also I'm looking for a change in direction in that big picture market data to suggest that this period of either sideways action or non-profitable market movement is over. So the next question is, if I'm positioned personally for expecting a neutral market or potentially a down market, and I'm running a long-only account, in other words, I can't go net short, I can't outright short stocks, and I'm not getting into options, then how can I still participate in this market activity even if I don't want to be necessarily, quote, long the market? And the answer has to do with net exposure and gross exposure. So first I'll just introduce the terms. Gross exposure is really talking about how many dollars are invested in a security, any security at all. So if I have an account with $1,000, 500 are cash, 500 are invested in index funds, let's say, then my gross exposure is 50%. Doesn't matter what I'm invested in. We're just talking about the absolute value of money that's at risk, because all invested money is at risk. So that's gross exposure. The other term we're going to talk about is net exposure. And the way to calculate that is you take your investments which are long and you subtract from them the investments that are short. So any stock that you're holding is going to be a long position. You benefit when the market goes up, therefore it's a long position. So how can you get a short position, directionally short position, with a long-only account? Well, as the name implies, a long-only account isn't going to allow you to outright short stocks. But that doesn't mean you can't participate in downside market action. There's a particular set of ETFs, which are called inverse ETFs, and these allow you to make money as the associated sector or index goes down. These will go up. And they also come in leveraged varieties so that you can get 2 times or 3 times leverage on whatever movement of the underlying index or sector you're looking for. Now, there are specific additional risks to investing in inverse and leveraged ETFs. We're not going to get into that here because, once again, this is not investment advice, and you need to do your own research regarding if these products are suitable for you. For me, however, in certain limited capacities, these products really help me to manage my net exposure in a long-only account. And I'll give maybe an extreme example. Let's say I wanted to take zero net exposure while maximizing my gross exposure in a long-only account. Theoretically, what can I do? So let's take a theoretical case of a portfolio where someone wants to maximize their gross exposure while minimizing their net exposure. The most efficient way to do that is by using 3 times inverse leveraged ETFs. Now, these are risky products, and it's very important that anyone using them does their research. And again, this is not investment advice. I'm not recommending these products. However, for the person that has the need in their portfolio, they may be a good answer. So do your own research. Hope I'm clear on that. Okay, so if you want to achieve zero net exposure and maximum gross exposure, a way to do that is to go with a 25% allocation to a 3 times inverse fund. And you'll match that with a 75% position in whatever you're looking to invest in. And what this is going to do for you is, on paper, theoretically, that portfolio doesn't care if the market goes up or down overall. All it cares about is the relative outperformance of the selections in that portfolio. So if someone had the view of the market that it's either going to be excessively volatile or that they specifically expect the market to go down, but they still want to participate in the market, this is a way to do that. If the stock selections are correct, if the selections will outperform the market, then that individual, even when the market is going down, will still be making money. Now, you want to talk about risk? Absolutely. What you're doing is you have to select not only the good long positions, but you also have to select the correct index sector, whichever, that you want to go against. And so there's a lot of calculation that goes into that type of a setup. And again, it's not right for everybody. So do your own research on that. Now, managing a portfolio with zero net exposure long term is probably not a normal thing. It's probably more so the case that adjusting net exposure happens as a result of outputs coming from some type of risk management system. At least in my case, that's how I approach it. So I'm running a risk management system, and it's suggesting to me, at least for the current moment, that you don't really want to be long the market, or I don't really want to be long the market because of the risks that system is identifying. And so what I'm going to do is I'm going to select maybe 1 or maybe 2 sectors or indices that I think is going to perform the worst, and I'm going to balance that against my long positions that I think have the best likelihood for succeeding within, in my case in particular, value and income strategies. And so in that way, I can still put on my long positions, my high conviction positions within those strategies, but I can still manage my net exposure to a level that's consistent with my view on the market. Finally, I want to make sure everybody knows about a networking event that's coming up. Division Brewing has agreed to host Lowercase Capital for a Finance and Brews Pint Night at their brewery. And there's also going to be some live music at some point in the evening, although I don't know what band is going to be there. So if you're in the Dallas-Fort Worth area, or particularly in Arlington, you want to come out, talk about stocks, have some craft brews, Division Brewing is a great place to do that, and I look forward to seeing you there. It's going to be June 11th at 5:30 p.m. That's a Thursday. So after work, come on out, grab a drink, and we can talk about some stocks. All right, have a good one.